Mark Newton, president and founder of Newton Advisors. Today's trade idea centers on shorting the QQQ, which is the Invesco QQQ Trust Series mirroring the NASDAQ 100 index. My thinking is that it's time to bet against big cap technology, thinking that tech has run its course and that we should yet again be at a level where tech starts to stall out and pull back in the weeks ahead. This argument centers on a few key technical factors. Initially, technology has had a stellar run in recent months, but has only recently started to lag, and I think this recent drop-off in momentum just since the middle part of May is interesting and really a reason to pay close attention at a time when tech has gotten very, very overbought. Sentiment has started to get very, very bullish on the market in general. We've started to see traditional sentiment polls like AAII and Investors Intelligence start to widen out yet again, and the equity put-to-call ratio is now down in the low 50s, almost as low as it was when the market peaked out in the latter part of January. So at a level of right around 0.52, the equity put-to-call ratio is showing us that people are now purchasing calls at nearly double a rate of what puts are being bought. Seasonality also favors betting against the market at this time. June tends to be the worst month of any of the 12 months in a midterm election year. The average return is about minus 1.7% for the S&P and minus 1.9% for the Dow. Traditionally, we're in the 6-month period where the market does tend to underperform between the months of April and October. So having had a stellar run-up from the beginning of May, where the market now is up about 2.5% in the S&P and up more than that, almost over 3% for the NASDAQ thus far in the first 8 to 10 trading days of the month of June, I think that betting against this recent run makes a ton of sense going into the latter 2 weeks of June, which seasonally should prove to be very weak. An additional argument centers on market cycles. Now we're at a level where my thinking is this month should play out very similar to the months of the past, where the market actually bottoms out at the beginning of part of the month and then peaks mid-month. Now we've seen that already in the months of February, March, April, and May, where the market started off at lows to start the month, it peaks out mid-month and pulls back towards the latter part of the month. QQQ right now is trading right near 175.80, which is really an identical level where we peaked out back in the month of March. So we've had a very big run, moving up 20 points just in the last almost a month or so, which equates to over a 13% gain just in a very short period of time. So I feel like betting against large cap technology at this point, when there's such a rapid, massive amount of enthusiasm and rush into the FANG stocks and into large cap tech, where most want to take a piece and really participate in the recent surge in stocks like Facebook and Amazon and Netflix and Google, not to mention some of the other large cap tech stocks, certainly makes a lot of sense at this point in the juncture when really sentiment has gotten very, very complacent and seasonality also favors betting against the market. I would also add to that momentum has gotten very overbought in the near term, and that's also a concern. And finally, we're starting to see evidence of counter-trend sell signals using the methods of Mr. Tom DeMark, who has created a plethora of different technical indicators, of which I tend to use personally as a confluence to really my trend-following style of looking at the markets technically. So we're seeing weekly TD sequential sell signals now appear on the QQQ for the first time really this year on a weekly basis after this run-up. So they're not confirmed yet, but my thinking is that as the market lies near March highs, it really makes sense to take a look at betting against this recent rally and thinking that the market stalls out. I like selling QQQ right near just south of 176. Right now it's 175.80, so I think the position can be entered now into this week as we are entering a time of the FOMC meeting on Wednesday and Thursday of this week, and thinking that I would really press this bet over the next couple of days if we were to see any minor rally that stops right near 179.50. And my target is right near 163. So I'm really using about a 4 to 5% stop on the upside, whereas betting that the QQQ could fall at least about 12 points or so or more on the downside over the next 2 to 3 weeks potentially. This trade, as it starts to work, if the market starts to gain acceleration on the downside, one would use trailing stops to really support the idea that so you can really manage your risk and continue to stay short something of this sort as it starts to pull back. But my thinking is it's an excellent time to put a trade like this on, and the sentiment and the seasonality and other short-term technical indicators seem to agree at this point. So my trade idea focuses on shorting the QQQ, and as this chart shows, we've had a pretty stellar run. We've gone from levels near the early part of April, right near 154, up to levels right near 175. So that's a rally of more than 12% just in the last 2 months. We're right up near the prior highs back in the middle part of March where we peaked out before. And when you take a look at monthly gauges of momentum, you can see that things have gotten quite overbought, and now we're starting to see evidence of what we call negative divergence. Price has pushed higher, but yet momentum is actually at a lower level. So that's reason for true concern. You also see the presence of counter-trend sell signals based on the works of Tom DeMark. You do see TD sequential sells both here, which right over the price that we saw back in January, as well as TD combo sells that were overpriced back in the month of December. So those have now lined up for the first time in nearly 3 years to show a confluence of counter-trend exhaustion that potentially could be important in marking a peak of some sort. Outside of that, I think it's interesting to point out that you're seeing an extraordinary amount of divergence when we look at the Qs versus things like the S&P or based on Europe. And we see that the NASDAQ has moved back to new highs, but yet we're still struggling with regards to the S&P or Europe really in making a similar move. So we've entered a time in mid-June where sentiment remains very complacent and seasonality is certainly a headwind to further gains. The market's up about 3% already over the first 8 trading days of June. And my thinking is that as we near the last 2 weeks of June, that could be a completely different story. So things have gotten overbought based on short-term momentum, and we're up near prior highs, and now we see evidence of counter-trend exhaustion at a time when most investors are trying to chase these FANG stocks right back to new high territory. So my thinking is that bet is going to be proven ill-timed, and if anything, it's right to bet on the Qs and think that we get up from levels right near 175 and peak out and pull back to levels right near 163. So that would be more than a 50% retracement off the move up from early April. And is my thinking that can happen over the next couple months before we can attempt to push up into the fall. So I like going against the trend, and that's my trade for today, shorting the QQQ.